Gold prices have been able to stage a really strong comeback. Silver prices even more. So the question we're asking ourselves now, should we be buying or should we continue to be bearish? That's what we're going to cover in today's market update. Alright guys, so this is gold prices, and I was bearish. You might remember that already here on November 10 or so, I was sharing the idea that we could be at the start of a significant downtrend. Why? Because we had all these vaccines, which ultimately are bearish for gold prices, because what people are doing is that they're shifting money away from gold and putting into other stocks like Cineworld, for example. And that's a cinema operator in the UK and as well in the US. And you can see that from its October lows, the share price is up with some 331%. But if you look at from the beginning of 2020, if you look at here, for example, like levels from last year, the share is still down with some 70%. So you still have people are buying these sectors that were badly hit just because they now think that the vaccine is going to solve their problems, which I tend to agree with as well. So we had that big slide on the Pfizer news, and from a technical perspective, it did make sense to sell, right? So we had that potential setup, and we went lower, but we didn't go all the way towards targets. I actually sold a bit myself around 1846 and got out at 1805 or so. So I managed to trade that little section here. Now, from a purely technical perspective, we're still in the downtrend, but we obviously are all the way back here at the breakout point, and that's usually a warning sign. So for now, I personally think there's still hope for bears to sell. Like they could potentially be selling around this area with tight stop losses on the other side, but it's nothing I would personally trade right now. But for now, the trend is bearish below 1881, and I would like to see a break to that level before turning really bullish. And I think realistically, it will go up, it will come down, and we'll spend some time here. And maybe this time next week, we're going to have a pattern of sideways consolidation around this area, and we could probably take a better decision at that point. So there's really no rush. In regards to silver, we had something interesting, especially if you look at from a 6-hour chart. So if you would load a line like that, you would actually see that we have a bit of a head and shoulders, some sort of a range, and the idea here was to sell. So you see we had that little break. So I actually sold a bit here, and then it went down to my favor, and then when it went up, I sold a bit more. Unfortunately though, for me, I actually got stopped out here. Now, looking at this today, that pattern was negated. So it's no longer active. So I wouldn't be a seller in silver. At the same time though, we're sort of stuck within this big range between 2163 and then you have this level up here at 2599. And right now the focus of investors is not on this. It's more on your cryptos. It's more on stock markets that are stocks that are undervalued. And indices in general, we're having a bit of a shift towards that. And more importantly, you got your USD, Aussie dollar, CAD. Like it's more about selling dollars than buying silver right now. So I have a suspicion that this can unfortunately trade sideways for longer. And that, guys, concludes today's market update. Don't forget to subscribe to our channel, and don't forget to like the video. It's really important. So if you do like what we're producing here, hit that like button. Maybe you just leave a simple hello or a thank you. That's really awesome, because what happens at that point is that YouTube will recognize that there's some interaction on the video and people liking the video, and they will show it to other people. And that's super important, because that tells us that we are on the right track here and tells us if we should produce more or less of these videos. Okay guys, thanks so much for watching, and I'll see you guys very soon. Bye-bye.